Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. Is the market overdue for a healthy correction, or is it just marking time as it waits to go higher? Well, for answers to those questions, and probably a little more, we are going to turn now to the man behind the burners in Cook's Kitchen, Kevin Cook, who is our senior stock strategist here at Zacks.com. So, since you're in the kitchen looking over these pots that are boiling.
Trying to.
Yesterday you wrote to your Tactical Trader subscribers that you don't short a sleeping bull. And so I'm going to ask, is this part of a mantra that you have over the last 3 months that the market is merely waiting to go higher?
Yeah, so, I mean, that's where I've been since the October reversal bottom. That, that the bottom was in. Mm-hmm. We knew that on October 5th. And the market has just been stair-stepping higher, reclaiming higher ground. You know, we got up to 1,200. Mm-hmm. We had the test 1,150 once in November, and then we captured 1,250 and getting up through those levels. I talked about that in our last S&P chart talk about the power that it takes to get up through resistance. Right. Once you do, it means you're going higher. The economy is sound. Europe is stable. And the economy is actually picking up some momentum, and we know that the Fed is on hold. So all the conditions are right in the kitchen, so to speak, for a good recipe here in the economy and earnings.
You actually characterize Europe as stable?
Yes.
Really?
Yes. I mean, and look at the way the market is reacting. Now, I have to pay attention to what the big money is doing, say a BlackRock or a PIMCO. And these money managers are not afraid of what's going on with Greece. It's, as we talked about last week, the momentum has slowed down. So let's take a look at the S&P chart and see what we're up against, why you don't short a sleeping bull.
Okay.
Yesterday we had a dip down to 1240 or 1340 on the S&P, and at the close, took it right back to 1350. Now these aren't big moves and the volatility is low, but the players who are trying to short the market keep getting hurt. So let's go back here. You can see that the market, once we got above 1250, it did some digestion above 1275, and you couldn't short it there. And everybody thought, oh, is this where we take profits? Then above 1300, same thing again. Little digestion there, not a good place to short. The shorts got killed again. Now we're looking at the same thing here above 1340. The market is doing that kind of digestion. Mm-hmm. A few weeks ago, we talked about, are we due for a pause or a pullback? I said, that's the high probability scenario, that we pull back to at least 1,300 before we make new highs above 1,370.
Okay.
That really is the best bet. But, you have to look at what the market is telling you here. And it's saying that it wants to go higher. So everybody who tries to short it gets hurt. And I would love a pullback, a 5% pullback. And anything near 1275 or 1250, I'd be a big buyer. You've got the moving averages lined up here, the 50-day at 1288. There'll probably be a bounce at 1300 before anything.
Okay. And that yesterday that Kevin was talking about was the 14th of February, in case you're looking at this long after the fact. So what do you tell people then who have significant profits of, let's say, 20 to 40% in some of their stocks and who might be just a little bit nervous here about fearing that a catalyst of some sort may send us lower?
Yeah, that's a great question. Again, it goes back to your time horizon. If these are stocks you want to own for a couple of years, then I think you're fine. But, if you're more of a short-term trader, as many of us are, you have to ask yourself the key questions. How will I feel if I give back 20% gains here? And so, and if you think you're going to be nervous about that, then that's telling you right away, yeah, at least take half the profits now. Because even if we do get a move up to 1370 or even 1400 on the S&P, you're going to get chances to get back in. We're not going to race higher here. So and any fear catalyst could send us lower. You take a look at the chart again. A lot of technical traders would describe this as some overextended rising wedge or something.
Yeah.
And all we need is a fear catalyst. Maybe it's Iran or something. And that would give us a 5% pullback. So yeah, people who've got a lot of profits, 20, 30, 40% in given stocks, maybe they should take half, and they'll sleep better at night. And this is really sort of a trader's market in a very narrow range here. So I'm still a bull, and I would love a pullback to 1250 that I think we will not get.
All right. He is Kevin Cook. He is our tactical trader and our senior stock strategist, and you can look at all of his columns on Zacks.com, linking to them off of our homepage. You can also follow him on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.